Mr. Divakar Gupta, Managing Director and CFO of India's largest bank, State Bank of India. Mr. Gupta, always a delight to have you back on ET Now. Thank you for joining us. Now, a lot has changed, Mr. Gupta, in last 3 months. That's the time we interacted with you last. Bond yields are threatening to go up. Government borrowing is looking slightly shaky, and there is a clear indication that Reserve Bank of India in next credit policy will cut rates.
Well, Nikunj, you know, March is a very volatile month for liquidity anyway. Some players are comfortable, some are short. There's a scramble for short-term deposits, and therefore you cannot read very much into rates the way they are moving. Bond yields did drop a little, and then they've gone up again over the last couple of days. I think the liquidity will continue to remain tight for the remaining part of this year, and all of us are expecting a certain amount of easing come April. But we'll have to wait and watch, and of course we'll have the Reserve Bank policy mid-April.
Mr. Gupta, morning. Let's chat about SBI now. 7,900 crore rupees is the preferential capital infusion which has already been approved by the government for SBI. What is the capital infusion that you are expecting from the government by way of the budget allocation, which was a sum total of 15,800?
Now, obviously, the budget allocation is for all public sector banks.
Right.
It's very hard to decide how the government will allocate this money at this point of time. I don't think anybody can make any guess about it. But if you look at a very aggregated level, 40 lakh crores are the banking assets. And, if they grow by 15-20%, you add 8 lakh crores, you need about 80,000 crores of capital. Retained capital of all banks put together is about 55-60,000 crores. There is an overall gap of about 25,000 crores of capital in the system. And the public sector share being about 75%, I think 15,000 crores is more or less there. It may be a little less or a little more. So it could be that we end up getting about 5,000 crores of that next year. But that's just a guess, there are no indications.
Mr. Gupta, is it too early to talk about your FY13 credit growth targets?
Yeah, that's fine. I mean, we expect the GDP numbers put out are 7.8, and our GDP could be anywhere between 7 and 7.8. I don't think the banking industry will grow faster than 17 or 18%, unless investment demand really returns very strongly. SBI should be in the same range, a little lower than the industry maybe.
Why lower than the industry, Mr. Gupta?
No, I think when there are asset concerns, we do not want to position ourselves over aggressively for gaining market share.
So at State Bank of India, what is the current endeavor? Protect your margins or reduce your NPS?
Yeah, protect asset quality.
Mr. Gupta, just want to get you in terms of, recently you lowered your interest rate in certain segments of loans, in fact, just a few days back. If you could throw some more light on which those segments are, and why would the bank, opt to lower the interest rates in this kind of an environment?
No, I think one of the intentions is to signal that we are equally keen to pass rate cuts on to our customers. I've been maintaining that State Bank is really a cost-plus bank. So our pricing will never be just what the market can bear. There is a fair amount of bottom line that we need to protect, and thereafter we would like to give customers the best deal possible. So we've cut rates on education loans. We have realigned some rates. There has not been a major cut in any segment so far. And, we do want to be safe rather than sorry, cutting and then raising. So a couple of weeks more and we'll have better indications of how much to pass on and in which segments.
Mr. Gupta, the RBI this morning has issued guidelines on NBFC lending against gold. Just wanted to confirm from you whether or not the LTV guideline of 60% is applicable to banks.
Yes, we have very significant margins on gold. I am not very sure of the numbers, so I don't think I'll confirm 60, but it should be thereabouts. We don't give 90% or 80% against gold. And as far as the guidelines for NBFCs are concerned, I am not aware. I have not seen them yet.
Kingfisher Airlines. Mr. Gupta, you would have guessed my question.
We are in continuous talks regarding salvaging Kingfisher.
If Kingfisher Airlines or if DGAC, if the airline authority, if they cancel the license, will you treat the entire account as an NPA?
No, I guess if that really happens, no, the entire account is NPA for us anyway.
But will you be marking it down?
We have already provided very significantly for the account as per the accounting practices. Okay. Now, marking the outstandings as NPA or the amount of provision we do against them is really more a technical issue. The crux of the issue is whether the airline can be saved. And I think that is really where the larger focus of everybody would be, including the government, including the promoters themselves and the banks.
But is that your intention as well, Mr. Gupta, to save the airline first and not write them off?
No, definitely. I mean, and that's true not just for Kingfisher. It's true for any viable, enterprise. And therefore, though our gross NPA numbers look so high, the fact is that many of these accounts would return, and the bank would not hesitate to help them.
Apart from Kingfisher Airlines, are there any individual accounts which are giving you sleepless nights?
Well, there are I think 5 or 6 or even 8 accounts which are significantly large and which are stressed. But suffice it to say, I think inherently all of them are viable. And irrespective of what happens to them in the short term, in the long term, I think they should all survive.
I may sound slightly repetitive with this one, Mr. Gupta, but this is just for the benefit of your shareholders and our viewers. What is your total exposure to Kingfisher Airlines? How much markdown you've done in Q3? And what is the kind of markdown we should expect in Q4?
No, the Kingfisher exposure is about 1,500 crores. And I don't think it will be right to share the numbers of provisioning on that. It will also not be right to guess what we will do in March end, because there are still 10 days to go. But as far as stakeholders are concerned, they can rest assured that the bank is very prudent and conservative in providing adequately for such accounts.
Your Q3 net interest margins were super. They were in the range of about 4%. So my compliments first. But my follow-up question is, are they sustainable?
The domestic margin was actually in excess of 4%, 4.05. And the overall margin, including international operations, was 3.82. These margins have not come because of any one-off. Obviously, we have raised rates from 8.25 to 10% base rate, but at 10% we still have the lowest base rate. So that is sustainable. We had about 70,000 crores of high-cost deposits which got rolled over, and we got a positive net interest income on those at the time of rollover. They were 10% plus and they got rolled over between 9.25 and 9.75. We also moved out some high-cost bulk deposits, about 35,000 crores. So, therefore, though the balance sheet will seem to grow a little slower, it's been very net interest income positive. So, these are all sustainable and long-term factors. We therefore expect margins to continue to remain healthy.
Mr. Gupta, there are certain factions of the market who believe that, Mr. Mallya is just waiting for SBI to blink first, come and rescue them. Is that a true assumption?
I wouldn't know that. I don't track the account every day. As the CFO, I have an aggregated picture of the account. The verticals really see the account in real time. But, it won't be fair to make a guess of that kind. I'm sure the promoters are equally keen to ensure that their own investment and their enterprise survives.
In terms of your various business, verticals, working capital, capex loan, and then home loans, which segment or which vertical do you think has potential to surprise on the upside for FY13?
Capex, definitely. What happens is that home loan growth has been muted, but it has not gone completely. It's marginally lower than FY11. And on the working capital side, for the SMEs and the mid-corporates, just to sustain current operations, more working capital has been needed. So the growth on our balance sheet this year largely is on the short lending side, cash credits, demand loans, working capital demand loans, and so on and so forth. It's on the capex side that we've really not had any growth at all, and that's where growth should return. That's what we are expecting in FY13.
Quick response to this one, Mr. Gupta, and I promise this is my final question. In between quarters, has your asset quality improved or deteriorated?
No, we had a very bad Q2. And Q3 would have been better, but for the fact that the Kingfisher account itself was a very large account. Even then, the Q3 numbers were not worse than the Q2 numbers. We expect Q4 numbers to be significantly better than Q3. And I think, therefore, on the bell curve, we are over the hump. And going forward, asset quality should look significantly better, quarter on quarter.